Good afternoon, everyone, and welcome to the Ankerstar Wealth Afternoon Show. I'm your host, Allison Ankerstar, and today we'll be talking about tech stocks being back in favor, the importance of portfolio rebalancing, and the latest in Apple stock. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good afternoon, Steve. It appears that tech stocks are back in favor. What does this mean for the market?
Hey, Allison. Hey, everybody. Afternoon show today because we were slammed with meetings all morning long. So it's not quite the cutting edge before the market opens information, which we like to get out to you every day, but more of a midday interpretation, which isn't quite as valuable, right? Because we're 2 hours out from the close of the day. But some questions did come in today, so I will answer those during the briefing that we have today. So overall, yeah, tech stocks are back, right? Just like Allison said, they're back in favor, it seems. But what does that mean for the overall market? Well, I have the NASDAQ pulled up here, and you can see from the NASDAQ perspective is that we are climbing out of the trench. If you look at, it was down here at 10.6, it's up at 12%. That's over a 10% move higher in the past month. Kind of doesn't feel like it in your portfolios, right? But certainly the tech is moving back higher. Now the question becomes, what does that mean for the overall market? Well, we don't know about the overall market, if you will, but what you can count on for technology, and we've seen this time after time, right? We saw this, most recently in March of 2020, and tech tends to overshoot to both the upside and the downside. So when you think March 2020 and you had the big sell-off, the whole market sold off 35%. Well, tech sold off, even more than that. And then when things turn, tech now, whatever the middle median ground is, which we don't exactly know, but the one thing we know is we don't land right on it. It seems like we go right past it. So it's a series of underperformance followed by outperformance to underperformance to outperformance. And that's kind of the story of technology. So if you're a buy and hold investor for the most part, then you don't really care. It's just the numbers can look quite ugly at times, but then again, you're slapping high fives, here soon. Once it recovers. If you back off and look a little bit at the overall market, so switching from the NASDAQ to the S&P, you can see the S&P is not down as much. However, get on the same chart here, 6 months. It also hasn't recovered as much, right? So that's kind of that reducing the volatility if you want to stay away from tech. Long-term, tech is obviously the place to be for your best long-term results. But again, you have to manage your own risk tolerance, risk capacity, or risk stomach, if you will, of how ugly can things get for you, and can you kind of grin and bear it during those difficult times. So overall, we talked about the S&P, which we have here right now, and we said a couple of days ago this key resistance level, which was right here at 3,900. Which is the floor. We talked about the floor a couple of days ago at the end of May, busted through that floor at the beginning of June. The new floor becomes a ceiling. So bang off the ceiling once, bang again here a couple of weeks ago, and now we hit it a third time and we're up and through. So that's a very healthy technical sign for the market. So a lot of stocks are doing that too. They've kind of recovered back from this low we had at the end of May. So overall, I think things are healthy for the market. More technical than anything related to what's going on in the earnings world, but overall a favorable sign for sure.
Next, lately you've made a series of small changes in client portfolios in the interest of portfolio rebalancing. Can you explain these moves?
Yeah, and this can look strange, right? Especially if for the first several years of business, we would buy and hold almost to an extreme and not really trim a lot or not really look to add a lot, just buying core positions and kind of holding them through. Well, one thing the volatility of this particular run has done is I went back and I looked and said, okay, had I not done that, had I managed it using a portfolio rebalancing, what would that have looked like? And when I did that, there's times when Apple was around 180 that we would have taken, sold some shares. And then that gives us the cash to now add shares when it's down lower. So what you're going to find is through this portfolio rebalancing concept, which you can see here in Investopedia and the key takeaways, is you're keeping your asset allocation mixed more balanced or within a range is really what we're starting to use. Versus letting when the market goes, becomes volatile, your whole portfolio kind of goes with it, right? And even especially if you're in technology, we just talked about the overshoot. that overshoot combined with the increased amplitude can really make some pretty horrific changes in your portfolio. So what we're doing now is going back through the portfolios, and we're looking at, Apple in this case. I've had a couple questions roll in. It's like, hey, I saw you trimmed my Apple like 10% of the shares or something. Yeah, that's portfolio rebalancing. That Apple's still the number one stock out there. It's all my favorite, my top holding in the book, top holding personally. None of that has changed. The future for Apple is still the same. However, sometimes within the portfolio management, it makes sense to allocate away from it or trim it. In the particular case of Apple, it's actually up 15% in the last month. Whenever you see something go up 15% a month, you have to ask, can this last? So especially if we had bought some shares lower or reinvested some shares lower, taking a little bit off the table now in favor of increasing that allocation is the right move for portfolio discipline. So sometimes it doesn't make sense. However, we use risk-aligned software with the risk-aligned portfolios that we have that help, generates these trades for us. And then we kind of look at the trades and say, do these make sense or do they not? If they don't make sense, we simply click delete and we move on and no trades happen. If they make sense though, then we're going to make these trades so we can get an overall risk-aligned portfolio, not only with the core holdings, but also with the satellite holdings that are out there for a client. So if you're wondering what's going on, that's what's going on there. Again, not major muscle movements, if you will, just minor tweaks to your portfolio to make it better overall.
Last, Apple stock is up 15% in the past month. Is ticker AAPL a buy, sell, or hold?
Right. Well, it's still my favorite, and I have to say it's a screaming buy here. And you're like, dude, I just texted you 5 seconds ago and said, why'd you sell some of my Apple? Well, the answer isn't because Apple's not a great company. It's still a buy. But if you already have so much, then it's proper portfolio discipline and management to trim a position, even though it's an overall buy. Nobody has a crystal ball. Apple could be at 120 in 3 weeks, right? We don't know. You just saw the president has COVID. If for some strange reason, that becomes, say, fatal in the next week or two, that will add volatility to the market. I don't care politically what side you're on and all the jokes you may or may want to make about that particular event. But that would be very bad for the market because that's volatility. That now we would have a new president come in right in front of a midterm. I mean, oh my gosh, heart attack for the market, right? So you just don't know where things are going to be. But I will take a 15% move up in Apple and the need for rebalancing if you have too much. If you don't have any, go out and buy some Apple today. So that's, it can seem like you're talking out of both sides of your mouth sometimes. When you say, is Apple a buy, sell, or hold? I say yes, right? So sell if you have too much, buy it, or hold if you have the right amount, and buy if you don't have any or you need more. So really, to change your question from is it a buy, sell, or hold, I would answer it with Apple should be a major position in your portfolio, but not an outsized position in your portfolio.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.